We are live. Hey there, Press.
Hey, Miss Lisa, how you doing?
I'm good. You were missed last week. I'm glad that you were able to be here with us this week. So you want to kick off today's topic, or do you want to chat a little bit, let some people roll in? What's good?
What's good is with all the euphoria of everything running up, you got Bitcoin running up, you have the S&P reaching new all-time highs yet again. I want everyone to be mindful of what happened last cycle, how everyone was euphoric and everyone was buying these risky assets and your growth stocks at the top of the cycle. And when things started crashing down, people were selling out of good investments as well as bad investments on the way down instead of just holding on and continuing to strive forward, being consistent, dollar cost averaging into good quality assets. Like I know it's fun, making money off of Dogecoin and Shiba Inu and things like that, but be mindful that it can all come down with the snap of a finger. We still have a lot of things that are going on that we're going to be touching on as the show progresses.
Okay. Not me. I wasn't selling out of anything. There is something I wanted to talk to you about, though. I think I am ready to let the target stock go. As
Mm,
soon as I am in the green, which I don't know. I'm using all the phones right now, so I can't take a look at it. But man, XRP is up 15% today. On fire.
wow.
On fire. But okay, so well, everyone, thanks for tuning in. Hi, Tim, Denise, Joe Delaney, and Morgan, Sheed. Thank you, everyone who has tuned in so far. So, what is today's what is the what where are we going to start on today's topic, Press?
Where can we start? Let's see. Using your job and or side hustles. You got to go to work, y'all. You got to go to work. Whether it be your regular 9 to 5, whether you run some sort of business, whether you have side hustles, stocks cost money at the end of the day. So when the market is coming down and you've already deployed all of your extra capital buying a lot of these companies at the top, if you're new to the market or if this is your first cycle, just be prepared that when it comes down, what are you going to do? Like, are you going to sell out of good investments because you hear all of these doom and gloom news reporters saying that the market is going to zero, or are you going to continue to be consistent and know that you hold on to some great companies and you're going to continue to dollar cost average into them? I'm not talking
Mhm.
about your risky assets or things like that. Just be mindful if you are dealing into these risky assets to take profit. There's nothing wrong with taking profit. Um, the rocket doesn't go to the moon forever. It will run out of fuel eventually.
Mhm. I see Sheet is putting in the chat, your 5 to 9. So you use your 9 to 5 to fund, what you're doing in the
Right.
5 to 9. And I had this book right here on my shelf, The 9 to 5 Millionaire. You have to, everyone's journey into wealth building is not going to be the same, but
Mhm.
there's nothing wrong with using that 9 to 5. You got to stretch it, maybe do an extra job on top of it, but that's the only way that we're going to be able to build wealth. If you want to have yourself set up for retirement and really have yourself set up for the future. So I agree with you on that. And
Mhm.
I sometimes I hear, because I do follow. I hear this more in the real estate kind of um, shorts and YouTube and stuff like that, where they talk about people kind of look down on you if you still have your 9 to 5, but and you have your additional businesses, but it's okay. You got to stick with that 9 to 5 until you are truly ready to walk away from it. And I think sometimes people walk away from the 9 to 5 too quickly, and their other
Mhm.
business isn't thriving enough and then they wind up having to go back to the 9 to 5, or really in that struggle there. So nothing wrong with it. Um,
That is correct.
hey Peachy, thanks for tuning in. and
I really
MTG.
wanted to hone in on I really wanted to hone in on using your job as leveraging your job to fund your investing, because there is no magical investment that you're going to just throw money into and it's going to make you a millionaire. Contrary to what anyone says, like there's no magic pill for you to achieve financial freedom. You gotta go to work. If you're physically able to work that overtime and it's available, take it. That's why you haven't seen me. I've been taking advantage of all of the overtime that they have available for me, even if it requires me being extra tired, even if it requires me putting my YouTube channel on the back burner temporarily, just so that I can take advantage. Because not only am I getting extra money on my paycheck, but I'm also able to contribute more to my 401k, which gets a company match. So that's free money that I'm taking advantage of. The more I'm able to put in, the more the company will match. So I'm using that, especially if the market was to start taking a downturn, then I'm really going to be, you're probably going to see me a little bit less, because I'm really going to be trying to work more so that my paychecks are much larger, so that more is contributed to my 401k, and in turn the company is matching more to my dollar. That's free money.
As you're talking about this, another thing that I want us to probably do another show on it is evaluating um, what you are invested into in your 401k. And I
Okay.
don't know. Can you guys share in the chat like how much flexibility you have, how many different choices you have when it comes to the different type of contributions that you have for the 401k or 403b or whatever. And especially if you do leave that job, move on to another job, and it rolls into an IRA. We got to know the detail. We have to know the performance. I know I was in that situation where I had left the job. My money was then rolled into a different funds at Empowerment, and it was a terrible choice. The fund, it was not able to maximize what the economy has been over the last few years, and I lost a lot of money by not moving it more quickly. It's moved now and it's thriving. And I'm going to share the details on that. But I think a lot of people are not contributing enough, and not having an understanding, or even they you have to set the bar. You have to have a standard of what your performance should be. I
Mm-hmm.
recently went to Fidelity, I think last week, and I was talking to someone there because I was setting up a new account, and they told me that my portfolio, which I know is very heavily into stocks, like 90%, whereas most likely the guidelines or the suggestion is that you have international and bonds and a different mix. But he also told me that the performance of my portfolio was much more than his, but he had the quote unquote right balance. But with the economy that we have been in currently, his balance, there's no, I couldn't tell I'm not sure how old he is, but I think that his portfolio was sounding too conservative
Mm-hmm.
for my taste. But you want to talk about working, and taking advantage of the 401k. I'm taking the conversation a little in a different
No,
direction,
you're good.
but what do you think about what I'm saying, Prez? That I think that people are not even think at 35 years old or 45, whatever, are you looking at your 401k and knowing your numbers, knowing when I get to 65 or 67, this what I'm doing today will generate me this much per month at that age? Is that the number that I am aiming for? I don't think that people are looking at their 401k and the performance of it, and contributing to it in the way that is going to make them achieve their goals, because they may not even have a goal set when it comes to that. What is your thoughts on what I'm saying?
Based on my own past experience and being naive and not knowing what I was doing, I'm just gonna assume and say that people are only worried about getting that paycheck. They don't even think to look. They don't even think to set it up. So it's automatically, probably more than likely, at default of A lot of jobs is 1.5% or 3% contribution, and they don't even know where that money is going to. And then they end up leaving the job, leaving money on the table, and finding out years later that they have this money sitting here and it's not really growing because it's in a default type of fund where you're not gaining any type of growth. It's very minimal growth. Um, you got to take we as people have to take better control of our personal finance and where our money is going,
Mhm.
especially through our employer. That's the first line of investing. A lot of us are investing and don't even realize that we're already investing. We're already in the market. Take that time out and look into your company's 401k and see what type of packages they have for you. And if you're able to, I'm not even gonna say if you're able to. It's imperative that you max out your contribution. I mean, this the younger you taking care of the older you. I've been saying this since day one. I mean,
Mhm.
don't make the excuses. Make those sacrifices financially in your budget that you need to make so that you're able to max that out. On top of that, I would strongly recommend that you look to investing into a good sound index fund individually outside of your employer. And then start looking at individual companies once you're and on all at the same time get rid of that debt, that high interest debt, and make sure you have a good sound emergency fund because everything looks good now, but we have a lot of things that's going on in this world that could potentially push the market into a new bear market. Just something I would like to stress that to you guys to keep your eyes and ears open.
Okay. I see Sheet is sharing that he's been encouraging his wife to step up her 401k contributions and figure out her profit sharing. Yes, cuz I mean a lot of us have these things, but
Mhm.
just having it, that's just step 1. Setting it up, that's just step 1, but increasing those contributions, being mindful of the performance, all of there are other steps that need to be taken, and you need to be if you haven't done it this year yet, take this time now to evaluate what is going on with the performance and see if it's time to raise it if you can. So you were mentioning a good sound index fund. Guys in the chat, share what is your favorite ETF currently that you are investing into? I I think Prez, is VTI still your favorite, or have you shifted over to SPLG?
I actually shifted over to SPLG simply because just for the shared purpose that is a lower expense ratio, just
Mhm.
slightly. VTI is 0.03, SPLG is 0.02,
Yes.
and I was leaning more towards being just into the S&P, so I chose SPLG because it's not managed by Schwab or Vanguard or any of those. It's actually managed by State Street Capital, and I'm able to buy that on any platform. And after this year is over with, when I start rebalancing my portfolio because I've held a lot of my investments longer than 1 year, then I'll start taking profit off of my VTI and shifting it over into SPLG.
Okay. So you're so inclined to even sell VTI and switch it over. Okay.
Yes,
All right.
yes.
Yeah, I
Not
think
all
it's
at one time, but slowly. I'll slowly start shifting, like $50 here, $50 there, along with
mhm,
my regular weekly contribution into that fund. I'm gonna start doing it that way.
okay.
I'll pay less in taxes because I've held it way longer than a year, and I can roll it over into something else, something I like a little bit better.
Okay. So Joe's favorite is VTI currently.
I
Um,
did that. I made that decision only because the share price is so cheap. It's
mhm,
only about $70 per share, and I'm able to accumulate more shares because I'm on a lower budget and I can see share appreciation a lot quicker than buying a $300 VTI. Nothing
yeah,
wrong with VTI. I still love VTI, but
mhm.
I'm thinking like, yeah, I would like to have more shares. I would like to build up my share size a lot faster. So I shifted over into SPLG. That's the only other reason. But it's basically the same thing as VOO. Same
So
amount of companies.
is that a taxable account or is that in an IRA?
It's actually in a taxable account.
Taxable account, okay. Because if you
Yes,
guys
it's in my
are with
taxable account.
if you guys are with Fidelity, my favorite one for exposure to the Fortune 500 companies over there is FXAIX, and it has a 0.015 expense ratio. Every time pipeline, every time pipeline comes in, he's late. He lets us know how it's okay. Thanks for tuning in.
He said, I'm
Um,
17 minutes late, but I'm here.
I guess that's me. Like I come into the chat with dropping my yellow hearts. That's Pipeline's thing because I've seen it so many times. All right. Yeah. So you mentioned FXAIX. I started investing into it when it was $206 and now it's 300. Um
Wow.
VOO, I started investing into that at $325. And I think we closed at about $555. And
You'll never see it at 350 again.
never again. Oh, speaking of that, I was looking at someone's comments and they were like, I'm not going to buy Palantir up at $66. And the people are in the chat telling him, like, what do you think is going to do? Go down for you? Listen, guys, it made me think about me when I got started investing into NVIDIA at around what, 400 something dollars. This is before the
Mhm,
split. And that, I'm telling you, it was just 500, 600, 1,000, $1,100. So
mhm.
listen, put the thought in and don't think that your investments that you want, that they're all going to come down for you to the point that you can pick them up. Sometimes those prices are never going to be seen again. So,
Yeah.
okay. So what else do we have on our agenda for today?
Things that could potentially bring the market down with the drop of a hat. Let's not forget about the national debt being well over $36 trillion. That's trillion with a T, trillion. They're just continuously printing money out of thin air. They're sending it to other countries. They're giving it to uh, refugees that are coming into the country for them to come here and for whatever reason, whether it be undocumented labor, whether it be whatever reason, um, we can't forget about that. Uh, the government could potentially shut down because of this. When they get tired of arguing back and forth over spending money, what the government likes to do on Capitol Hill is they'll say, you know what? Well, we're not coming to work, and they fold their arms and we're not coming to work since y'all don't want to agree with us. We're not going to work, and they'll shut the entire government down, and they'll still get paid. They'll still give themselves bonuses. They're still going to trade in the stock market. A lot of them trade in the stock market, and you don't even realize it. Nancy Pelosi is one of them, allegedly. Um, but this is the time where what I'm doing is I'm beefing up my emergency savings. And not only my emergency savings, but I also have a sinking fund just for buying the market crash. I'm looking for good companies that no one is even talking about right now. A lot of people are talking about technology companies. You have the artificial intelligence bubble, you have the crypto bubble, you have so many bubbles. It's like it's gonna pop eventually. Like, what do you do? Are you prepared for when it pops and you see the market come down, the S&P 500 come down 20% and stay there? What are you going to do? Are you going to be like, what do you think about Alphabet? What do you think about Amazon? I bought Nvidia. What are you going to do? Like, are you going to still buy it, or are you going to sell for a loss because you're afraid that the market is going to go to zero? Don't make the same mistakes that I have made in the past, not knowing what I was doing, buying in the risky assets, and then you end up getting in fear when the market comes crashing down and you're selling for a loss. Like, you just became exit liquidity to a hedge fund or a politician or another trader or a more savvy investor. You're giving your money away when you do things like that. And another thing, I don't want anyone to have to sell their investments because they're not prepared for emergency financially. I've been there as well more than once, and it hurts. And then you got had some of these companies. I had Palantir back when it was $9, and look at the price of it now. So every time I see Palantir making new all-time highs, and I had a nice amount at $9, I'm kicking myself in the head because I wasn't prepared for that emergency financially. So that's what I'm making sure I'm taking care of now. And I'm investing a little bit less and I'm saving a little bit more because all of this euphoria, you have to be fearful when others are greedy. Everyone's being greedy right now, and Prez is being fearful because I know that this bubble is gonna pop eventually and it's gonna come down hard.
Mhm. Palantir is thriving now, but really, if you would have had it from 2 years ago, the price where it was 2 years ago was the same price just a few months ago. So it would have been something that you wouldn't. It's like me and Target of holding on to
Mhm.
it for such a long time and not seeing that appreciation. It would have you most likely you wouldn't have want to held on to it from when it was back at 9 until now at 66. In between there, you probably would have, sold out and then bought back in later on. But I'm just
Actually, when I did buy it, they had just reported that they were profitable. There was their first earnings report where they reported that they were profitable. And since then, it's been on a steady uptrend since then. I bought it right after they reported their earnings. They said they're now profitable. I said, well, okay, I like the business idea. I've been studying this company for a little while now. I'm going to go ahead and buy it now because I stayed away from it through the previous cycle when everyone else
okay.
was buying it when it was at 30, $40. I didn't touch it. Like I would see the YouTube videos and the influencers talk about it. And I just started doing my research. I'm like, well, they're not profitable. I'm already investing into GameStop, AMC, and all of the hype stocks from the previous cycle. I'm like, I don't want to have a whole nother company dragging down my portfolio. I was actually starting to sell out of a lot of those hype stocks and meme stocks at a loss at that point in time. So I put
Mhm.
Palantir on my I might buy list and I just watched it. And I would pay attention to the earnings reports and things like that. As soon as they reported that they were officially profitable company, I bought a little bit. I bought about 5 or 6 shares at about $9 and some change, and I sold out of it at about $20, something like that, because I had to. I didn't have that nice size emergency fund for an emergency, and another emergency came up. Because once life happens, it's like a domino effect. It's just gonna keep happening. You're gonna have one event after another. Kind of like I'm gonna use this analogy. You're running late for work. You knew you should have left out 15 minutes before you left out, and now you got this a-hole in front of you that's driving extra slow because the powers that be know that you're running late for work, so they're gonna throw everything in your path to make you late for work. You understand what I'm saying? So yeah, that's how life can get you. Once one thing happened, another bad thing can happen, then another bad thing. Next thing you know, you on Skid Row.
Yes, I hear you. I totally agree. Um, so with you're saying you're going to be looking for some of those hidden gems that you might invest into.
Mhm,
With the crash. So I put out a video recently. It was cut from one of our other lives about using a stop loss. And someone said, it doesn't work. It usually whatever happens in the after hours, and it's like kind of using a stop loss it's not worth it, kind of a thing.
mhm.
So I just wanted to touch on that. If it's stock that you're holding, what do you think about what I'm saying? Do you do do you think that's I understand that's just one person's opinion, but, do you think that that's something that you will be incorporating in your plan if you get into, some, uh, meme coins or some crypto or tech stock that is really hasn't had that long track record yet? What is going to be your plan on using a stop loss? And do you have any concerns on a particular day that it could come down hard and your stop loss not kick in after hours or something like that?
As far as an actual investment, I use no stop loss. I buy the company with plans to hold it until I'm old. You understand? I
Okay.
don't plan on getting rid of it. Now, if it's not performing very well and I'm having to change the heart on it, then I'll evaluate it after 1 year. I'll pay less in taxes. It's bad enough that I day trade from time to time, which I'm actually scaling back on because I'm working so much now. I'm
Mhm.
trading less and I'm working more because my job is easy. It's easy to get the hours they're available, so I'm gonna take them. It's a lot better than staring at a chart, and if I don't get a trade, I don't make any money. You understand what I'm saying? So I'm, being more, a little bit more smart and more surgical with how I move in these markets as of now versus the younger me a year ago or 2 years ago, whether as though I'm trying to achieve financial freedom via day trading. Is the odds are already stacked against you, like tremendously. The learning curve is really steep, although it is possible, but you're gonna have a lot of things in place. You're gonna need that emergency fund. You're gonna need months on top of months, if not an entire year worth of your living expenses already saved up before you make that step into day trading full time. There's a lot that comes with it. It's stressful in the beginning, but it can be very rewarding once you have all of those things set in place. And you also need to have a nice size retirement fund built up, whereas
Okay.
though
Okay.
when you get old, when you're ready to not trade anymore, you're ready to not work anymore or maintain a business, you just ready to kick it and live on the beach. You have those dividends coming in, you have all of that stuff coming in, so you don't have to worry about it. On top of that, day trading has no health plan.
Mhm.
So
Okay,
you're
so
responsible for any type of health expenses. So it's nothing wrong with working your job. You have to go to work. You have to.
all right. So I guess you're saying even if it is something speculative, you're gonna put the research in. It's gonna be something that you have a high confidence in because you're gonna be
Right.
trying to hold it at least for the year. And it would be
Hmm.
something drastic happen that would have you decide to sell out of it earlier than that. So,
Mainly due
okay,
to tax purposes. Mainly
okay.
due to I'm being
Yeah.
more mindful of taxes because at the end of the year, and you've been day trading, and you end up owing at the end of the year, and you don't have that money set to the side. The IRS don't play, y'all. The
Oh.
IRS don't play.
Guys, thank you for tuning in over on TikTok. Thanks, Jaleel, and anyone else over there. If you want to be part of the conversation, please come on over to YouTube. Okay,
To everyone
pipeline.
in the chat, hello. If I haven't spoke to you already, I know I didn't. I do apologize for being rude. I apologize for my absence, but Prez been working extra hard, y'all. My job is offering pretty much unlimited overtime, so I'm physically able to do it, even if it requires me having bags under my eyes and drinking my coffee from sheets because I have yet to go to my storage unit and get my coffee maker, which I need to go and do on my next day off. But thank you all for tuning in. I appreciate you all for being here and showing support and hitting that like button. And hopefully you're enjoying this Sunday stock talk conversation.
Yes. So let's take a look. So Pipeline is sharing that when they signed up for Robinhood, they got some Bitcoin, and it's up 131%.
Wow.
He's up $13 per share on his VTI. Yeah, so yeah, in time you can really um if you're a buy and hold investor, you have to give it time and you can
Hmm.
really see your investments thriving in, but you just have to give it a chance. And if you're new to investing, that's something that you don't have 10, 15, 20 years to reflect back on. You just take it slow and build. Don't tap into it and just keep on pushing through and letting these positions build up. I'll tell you, I just started investing into FXAIX. It's probably been about 14 months now, and I was at about 140, it was $148 per share when I got started, and now we're at 210. So, um, which may not is not, as extreme as Nvidia or something like that, but you have to decide where you wanna take your risk and, where you wanna focus on building up your portfolio, and having an index fund or mutual fund as a part of that mix, I find to be a good balance. especially when the economy is up and down. So it's 3:30, Press. So what other points do you want to focus on today's topic?
Remember what happened last cycle, the mistakes that we've made, and be sure not to ever make them again. And I've already touched on this. The meme stocks from the previous cycle. For those who were in the market the previous cycle, you had your AMC, you had your GameStop, you had your Charge Point. Look at the share price of them that time period, and look at them now. Like they're just bleeding out. Like look like they're going to zero. They're almost all penny stocks. Another one is Lucid. You have Neo. It's quite a few of them. A lot of trash companies, but the previous cycle they were running up the same way XRP is running up today. And like everyone's euphoric, like, yeah, this is the next big thing. And a lot of people put their life savings, all of their money into these assets, and now they're mad.
Because they weren't assets. What were they truly,
They
Press?
weren't assets. They were lottery tickets. They were lottery tickets that went to zero, basically. It's like, don't gamble, don't play the lottery.
Yeah.
You have a higher chance of losing than actually winning. But if you look in your cabinet and you look at the company that's making these products that you use every day, 9 times out of 10, it's a publicly traded company and you can buy it because you know they're going to make money because you're using this product. Your seasonings and your on your spice rack, your beverages that's in your refrigerator, everything, the cleaning supplies that you use to clean your home. Like,
Mhm.
look at these companies. These are the companies that no one is talking about right now, and they're guaranteed to generate income because these are products and services that we use every day, every
Well,
day.
the product that iPhone, iPhone, uh, iPad,
Not
that's
just not just
no,
technology, not just technology.
I know, but
Because
that
we're
is
we're in a we're actually in a tech bubble. Nothing wrong with buying Apple. I love Apple. Nothing wrong with it, but everyone is focused on it right now.
mhm.
Everyone is really focused on Apple, Microsoft, Nvidia, Meta. Everyone is focused on that right now. It's all it takes for one of these companies to report bad earnings, and it can bring down the entire market, especially Apple. If Apple was the miss earnings tomorrow, you can best believe the market is going to have a nice correction because Apple missed earnings and they have a week forward guidance. And next thing you know, Nvidia is next, then Microsoft is after that, and the whole market is because the market is heavily weighted in the technology sector. Just something to keep the bring to your attention and keep on your radar. There are other sectors than just the technology sector. I know artificial intelligence is the next big thing, and it's a lot of growth potential in these companies, but we're in a bubble, y'all. We're in a bubble.
Yeah, I was bringing that up because whenever people say, like, "Buy what you use," Apple is the one products
Hmm.
that I use and I invest into. I don't have, Coca-Cola, and I don't have a lot of individual stocks that I feel that connection to that ecosystem or that product that I eat or drink all of the time. So Apple is the one for me of the what I invest into and what I consume on a regular basis. So, all right. So what's our last? Oh, you had geopolitical tensions, ongoing conflicts, trade tariffs, and supply chain concerns as a point that I wanted to touch on. I don't even know how to go about getting talking about this. Our president is our president elect. We know who he is, and we
Hmm.
there's nothing we can do about that. I just have a concern about um, you know, how do we go about playing nice with China and Canada and Mexico because we need products and materials and things from these countries, and it seems like
Hmm.
he wants to impose these tariffs, and how are we gonna then go to Walmart and go to our local stores and be able to still be how are they gonna fill their shelves and sell their products to us at a decent price? I just wonder what the vision is, and I know I'm just a
Okay,
little
let me try to break that down just a little bit because I've been studying it for a while now. Basically, what I'm gathering is he's trying to incentivize a lot of these businesses that has moved out back in the 80s and 90s. A lot of businesses and manufacturing companies moved out of the United States into these other countries. So that took away a lot of factory jobs and warehouse jobs and things of that nature. So what he's trying to do is incentivize a lot of these companies to bring the business and jobs back to the United States. He's not trying to make it to where as though you can't buy from these other countries or anything like that. He's just simply giving them an ultimatum. Either you play fair and bring a lot of these businesses back to the United States, or you're gonna have to pay. You're gonna have to pay the same way when it goes as it goes for these countries that our military is protecting and we're sending money to them and we're getting nothing in return. And meanwhile, the national debt is continuously going up. We still have homelessness at an all-time high right now. We have unemployment rate that is still going up. That's another key point that I would like to touch on. The labor market is getting weaker, and even though inflation is slowing down, but when you go to the market, those prices are still high. They're still
Mhm.
high. I was just in the market the other day. Like it's not going up as fast as it was, but they're still high. Like I'm still looking at things like I'm not paying for that. Like I wanted it, but not no more. I'm not paying that for it. And then I look at the actual package, and it's not even the same size that it was last year, and I'm paying more for less. Nah,
Shrinkflation. Yes, Prez.
yeah,
We've all
shrinkflation.
we've all encountered this. I know my coffee pods that used to have 12 in the box now has 10. They're using the same box, but they just eliminated 2 out of there. And so many other things that if you look closely at the packaging, we know this is happening. But I understand what you're saying, and I'm not asking you to give me the answer. I
Mhm.
just these are the things that are going through my head. I understand your point about wanting to bring those type of, do something for the industries in the US and have products come from us. But how quickly can we get that going? You know, that
Right.
could that could take his whole term to really you can't I just while we're trying to get to that point, if that is the goal, how are
Mhm.
we gonna be able to afford our products, you know? I touched on this
Right.
because the head people at Walmart are already saying if these tariffs do go into place, I'm using Walmart as an example because it is the most basic type of store that we go to for those regular products. Even Target is a higher level store than Walmart. You know what I'm saying? And if
Mhm.
they're saying they're going to have to increase prices because of being able to get their inventory in, then it's just a sad situation. And I hope that that
I
the
agree with David's comment.
administration is thinking about the big picture on it and how long can we survive in trying to live our daily lives while they're trying to work through these type of processes. Um,
Mhm.
so, what did David say? Which comment?
Just riling up the base. It's a lot of fluff. It is, in my opinion, a lot of fluff. Like he could be just talking tough to get the other world leaders to get in line because they're just running over top of us right now. Like our leadership is right now that we have in place is weak. And these other countries are looking at us and they're laughing. They really are. And they're just doing what they want to do. And we're just giving them money. That's what I see. We're just giving them money.
Mhm.
Meanwhile, we got people here that are struggling and they can't even get a job, let alone a free healthcare. You understand what I'm saying? So something to keep mindful of, you guys. Like be mindful of your excessive spending, your consumer debt, get it under control. Now is the time, not later. Like, stop making excuses. Like, if you don't need it, don't buy it. Um, and start putting that money to work. Not all at one time, but start slowly but surely and stay consistent with it. Buying into these great companies that's gonna generate you income in the long run. That's how you win. It's not gonna happen overnight. You just gotta work harder. You gotta work. You gotta work, y'all. I'm doing it. I'm showing you proof that I'm doing it. You gotta go to
Mhm.
work. I can show you better than I can tell you though. Just stay updated. I'm gonna keep you guys updated. I'll try to do a better job with recording more content to keep you guys updated on my journey. I got linked on about it, so I'm gonna do I'm gonna do better because I know better.
All right. Well, Prez, I know you have to get going, that you have a schedule to keep to. Guys, that's it for this week's Stock Talk episode. I hope you enjoyed, and I hope you are come back next Sunday, 3 p.m. Eastern Time. If you're ready to open a new account, check out our referral links. If you're watching from Prez's side, make sure to subscribe to my channel. If you are watching on my channel, make sure to subscribe to Prez the Investor. I dropped the StreamYard link. If there are any channel members that would like to chat behind the scenes, I'm going to end the live, but I'm going to stay on for a little bit longer. So feel free to click that link if you would like to chat about anything upcoming, or just want to chat in general on plans on we can get going with our plans on how we are going to go about our financial journey into 2025. So any closing words for us, Prez?
You gotta go to work, y'all. You gotta go to work. You gotta go to work. You gotta go to work.
Okay. So we will see you next week. Thanks for tuning in. Next week, Sunday, 3 p.m. Eastern Standard Time. Hope everyone had a nice long weekend. If you celebrate Thanksgiving, I hope you had a good meal. If you did not, I hope maybe you got some extra holiday pay and got to relax, or just something good. And we will see you soon. Thanks for tuning in. Okay, bye.